Welcome to the Mainsail Financial Group podcast series, where we host industry experts and local professionals to help share some insights into areas that we don't really focus on day to day. Today we want to thank Sean McConnell for joining us. He's going to discuss some of the residential real estate markets and kind of some trends we're seeing moving forward. Sean's actually a broker and a team leader for the Northern Key team with Compass Real Estate here in the greater Seattle area. He first became a broker back in May of 2017.
Yeah.
Okay. Mm-hmm. And since then, they've closed over 246 homes, 141 million or so in sales.
Yep.
That's sound right?
That's correct.
So really happy to have Sean with us here. Thanks
for having me, man.
Yeah, of course.
Appreciate it.
Yeah. So I'm going to jump right into things here
Okay.
with probably the $1 million question.
Mm-hmm.
With the market doing what it has done since 2009, the housing market specifically.
Okay.
Right. We've had this huge run up, especially in the Seattle area. And so I think the question on everyone's mind as things start to, let's say, slightly cool lately,
Yep.
is what's ahead of us.
Well, that's a loaded question. Yeah, I mean, look, I've been in the business since 2017, so we got our feet wet when it was just like the peak of crazy.
Sure.
So I didn't really know any different. I came out, it was just, if you had a seller who was putting their home up for sale, they were basically just sitting back going like, hey, where's my bag of cash?
Sure.
And buyers, they had to do basically a song, dance, anything they could do to basically compete and win a property.
Absolutely.
We would call them, bidding wars.
Sure.
And really it was because we had a lot of foreign investment coming in.
Mm-hmm.
So because they're all blind offers, everybody's anticipating that they're going to be up against a cash deal.
Yeah.
Even if they weren't, everybody had to approach the scenario like they weren't a super low inventory. So obviously supply and demand, the prices are going,
Right.
through the roof.
Yeah.
And almost like a light switch, in May or June of 2018, we saw it just kind of, cool off.
Mm-hmm.
And look, I've had one of my best years because it's normal real estate again.
Right.
Like I can breathe, like I can actually hang out with my kids again and like come home at normal times.
Uh-huh.
It was just nuts.
Sure.
And everybody's worried like, oh, what's wrong with it? Well, there's nothing wrong with it. We just forgot what normal real estate was, I think. So it's not bad. It's still a great investment.
Okay.
Just, hey, buy your real estate. Don't try to flip out of it in 2 years. Buy it, sit on it, wait, buy it because it's right for you and your family.
Right. Crazy idea.
Yeah, I know, right? Like, it should be an investment. Well, right, investments are important. You also kind of want to like where you live, too. So.
Good deal. And actually, you brought up something that I wanted to talk a little bit about today. You brought up foreign investment.
Yeah.
I know with one of the reasons that some of the real estate up here has gone this way is a lot of people from the Bay Area moving up, but also a lot of Chinese investors.
Yes.
And not too long ago, the incentive for Chinese investors to invest in U.S. real estate has gone away, I believe.
Yeah.
So what's the impact? What has been? What do you expect is going to be the impact of that?
I mean, again, it just goes back to what I was saying. That was happening a lot, and there were companies that were literally created and founded on basically the principle that like, hey, if you don't have cash, we're going to give you cash to compete against these foreign investments. That was really the only way people were able to get into these properties. So the impact that I think it's had on the real estate market is just, look, there's one less player in the market. And they're still there. It's dropped. I couldn't tell you what the percentage is. But there's just limitations to how much cash can flow out into the U.S. So, people's perspective is limited. They're going back to, some people don't know real estate before 2008.
Right.
So, myself included, right? So it's like, oh, okay, this is normal. These contracts mean something again. There's negotiations happening. There's contingencies.
Sure.
These are the things that have been written into the contracts that used to just get struck out.
Yeah.
And it was just like a fire sale. And it's just normal real estate again, which is great. There's a balance and ebb and flow between the buyers and sellers again.
Okay. I'm looking forward. I'm going to come back to that as we kind of go
Okay,
down.
sure, yeah.
So I'm looking forward to coming back to that.
Okay.
But the second part...
Are you buying a house?
No,
Okay.
not anytime soon. Anyway.
Okay.
Second part of that equation was also about the big tech in the area,
Uh-huh.
and so especially lately, a lot of that has, not to say Seattle's slowed down,
Mhm.
but a lot of the Amazons and Microsoft, well not Microsoft, Google, like a lot of those big
Facebook,
companies,
yeah, sure.
are moving to the east side.
Yeah.
And so I'm curious if you're starting to see any discrepancy or trends between the two sides of the lake.
Yeah, boy, I focus a lot of my business on Seattle North. We do some business on the east side. I think the home values are slightly higher on the east side, and that's just how it's been for a while. As far as investment, is it a good area is it better to buy on the east side versus Seattle? I don't really know, because I would say, the Expedia campus is going in Inner Bay.
Right.
That's huge.
Yeah.
That Inner Bay, I mean, you have Magnolia on one side, you have Queen Anne on the other.
Mm-hmm.
Inner Bay has kind of been sort of overlooked.
Yeah, for sure.
And there's 100 acres of undeveloped land in that area that people are finally starting to look at and go like, hey, this campus is going in, bars, restaurants, everything that supports that. So I don't necessarily know that Seattle is going to take a huge hit. I think a bigger issue or a bigger factor is that a lot of the tech industry has people that churn in and out. So it's less about east side versus Seattle, and I think more about the culture of the tech industry and like, are these the kinds of people that are going to invest and stay in the Puget Sound area in general?
Sense.
And 7 out of 10 people I think right now are transplants, not from here.
Wow, that's changed a lot recently, I would assume.
Yeah.
Huh, that's interesting. Along those lines too, so as the cities, the Seattles and Bellevues are just getting so expensive, are you seeing that a lot of people are maybe either renting or moving outside of the city a little bit more?
Yeah, big time.
Okay.
I mean, the rents aren't much better. And people that know, it's like, hey, I always say, well, should I rent? Should I buy? I'm like, I mean, even if you take a hit on your purchase, so look, it's all theoretical gains or losses until you sell it.
Sure.
I have I would give you almost 100% guarantee that if you're renting, you're not getting that money back from your landlord.
Sure.
so like at least you're putting something towards yourself. But to your point, I've seen a lot of people move outside of the city.
Okay.
Shoreline for a long time was just like, hey, look, if you got to get outside of Seattle, Shoreline's the next best thing. Areas like Edmonds and Mill Creek and Bothell, they were kind of, they were off a lot of people's radar.
Yeah.
Those have been huge in the last couple of years.
Yeah, for sure. I was actually raised up in Edmonds.
Oh, okay. I live there.
Yeah, okay. It's a great area, but it's amazing, to your point, how many people are moving back up there. It seems like it's not as old of a crowd as it used to be. For
sure. I moved up there in 2012, and I remember friends just being like, okay, we'll see you never,
Right.
That's it.
Yeah.
Because I've spent a lot of time in Ballard. I'm like, look, it's 20-25 minutes in an Uber down to Ballard, or Fremont. And now I think I'm the closest person to the city, and they're so far out. They've gotten pushed out.
Yeah.
And even in the last year, I'm seeing a lot more inquiries coming in like Mukilteo.
Huh.
They're on people's radar again, or maybe for the first time ever. I don't know.
Interesting.
But yeah.
Okay. I want to switch gears here a little bit and talk kind of macro. So one of the words that's been thrown around a lot lately in our world is the R word, the recession, that may be on the horizon. We don't feel like that's necessarily anything that's on the forefront, but I just want to ask hypothetically, if that were to come about, how you feel that might affect or not the housing market in our area.
Yeah, that's a good question. I don't know. I mean, do you think that there's a lot of indicators that there's going to be a recession?
I think the media likes to point out
the
few indicators that are out there.
Yeah, I agree. So I don't know that there's anything that's really pointing to it. Look, we lost one element of the real estate market. People felt it going from crazy to normal. Normal feels slow.
Sure.
And people go, read the news, read the headlines, they go, hey, look, there's probably a recession coming.
Yeah.
Based on what?
Right.
And, to your point, I don't always know that recession means housing crisis. we think that because the last recession we had was so big, it revolved around the housing industry.
Yeah.
People just automatically correlate those two things. And previous to that, I think there was only one other recession where housing prices actually went down. I think 1988 they saw like 6% jump. I don't know the figures offhand, but I think out of the last 6, 4 of them saw a pretty good appreciation.
Sure. Okay.
Yeah.
Well, that's a good point. I think, with whatever's the most recent, we sometimes in our heads will just think that that's always the case.
That's what it is. Here comes another housing crisis. Like, no, we didn't say housing crisis. We said recession, and even that we're kind of, who knows if that's real.
Sure. Along those lines as well, with the interest rates where they are today, really at all-time lows, right?
Yep.
Can you maybe speak a little bit about the impact of interest rates on the housing market as well?
It makes a huge impact. We saw the rates jump up just a little bit in the last couple of weeks, and I think new mortgage applications are down 12%.
Huh.
So it really does impact people. Everyone was getting in on refining again because rates were so low.
Right.
So I think a lot of lenders were really in over their heads with a lot of refi business coming through. But yeah, it absolutely, rates always impact the market, and I think lower rates definitely get buyers back out there. I think in our market, the lower rates didn't necessarily mean higher prices though.
Yeah.
Because we already saw that.
Right.
And now it's just about, giving people more purchasing power.
Sure.
I think they've got about 10%, right where rates are right now, this same time last year, they've got about 10% more purchasing power.
Huh.
So if you were to buy a home for $1 million, you could get one for 1.1 million.
Huh.
And the home prices are have plateaued.
Right.
So you actually get better homes right now than you were last year.
Huh.
Yeah.
That's interesting. Yeah, it's funny how going from almost nothing to basically nothing can make
Yeah.
that big of a difference.
Yeah, I don't know where else to go from there though.
Right. Yeah.
Zero? I don't know.
Right. Well, unfortunately, there's negative interest rates out there.
Oh,
as well,
okay.
so who knows? Different story.
Yeah.
So I want to come back. So earlier you brought up, the buyer and seller side of things. So I want to maybe talk a little bit about that today as well.
Mm-hmm.
What are some pitfalls, I guess, that you typically see a buyer or seller run into?
Yeah. In what regard? What do you mean?
I guess maybe in terms of what they might have been able to do to buy or sell at a better price. Some things that maybe a first-time home buyer might not see going into a home, and it turns around and bites them, that kind of thing.
Yeah, I mean, look, there's a lot of information on the internet, so I think one of the challenges that I run into with, let's start with buyers. We have a lot of smart people in this area. They work for big tech companies.
Yeah.
They're really savvy. They're used to getting online and solving everything themselves. And I think that oftentimes buyers forget that there's an emotional human being on the other side of the transaction.
Yeah.
And they're like, I've got this data point to support this, and I've got this data point to support that, and it's like, hey, those are all great, and those all make for a great case in a comment thread.
Right.
But the seller doesn't care.
Sure.
Right? They care about what's important to them. So I mean, that's why I have a job. I broker between these parties so that you don't have the buyers and the sellers butting heads, because it does become really volatile. It becomes really emotional, and I think buyers oftentimes go in and they anchor on data points, and they go, this home is only worth this much because I must be or this home has sat on the market for 60 days, so I'm the only game in town. They've got to do what I want, and I call it the cosmic irony of real estate, because as soon as you're thinking about writing an offer, there's somebody else who's coming in with an offer, the same day. I've had homes slip between our fingers that have been on the market for 200 days, and same day we're thinking about writing an offer, somebody else comes in and buys it. So I would say to buyers, be careful about thinking you're the yes, it's slowed down compared to 2017, but you're not the only person out there with a loan who can buy a house.
Okay.
And I think for sellers, it's kind of the same. Consider that you've got a buyer who there's more inventory than there was. Don't try to push your buyers around. You want to be cognizant of the fact that hey, they have more contingencies in their offers.
Right.
They don't like the way things are going. They do have ways to back out of the contract and to go find something else. So, you know, try to make it a nice.
Yeah.
Be nice.
Yeah.
Yeah. Right.
You know, so with that, so is that one of the reasons that maybe you see houses sitting a little bit longer, is because sellers have gotten so used to this, you know, bidding war that you talked about before?
Yeah, I do. I think we've been taught through, you know, a lot of these online portals to start treating our homes like investments. Before 2008,
Yeah.
2009, we didn't have a graph associated to our home that said, this is now an investment.
Right.
This is what your house is now worth.
Mm-hmm.
Kind of just trusted what brokers said,
Sure.
and, you know, hopefully we made money on it when we got out of it, and people stayed in their homes a lot longer.
Mm-hmm.
So now the internet, these portals are training us to treat our home like it's an investment, you know?
Yeah.
And I think that's, you've got sellers that, again, they anchor on this price. They go, well, this says that my home's worth
Gotcha.
this much, and you're going like, hey, look,